students, a large retail organizations that deals with varieties of products have different segments in order to have a better administration efficiency. A large retail organization such as you might have seen Reliance Trend or Reliance Big Basket or Big Bazaar or any other mall that you have gone to certain metro cities of Bangalore, Chennai, Mumbai, etc. In such a large organization, they have different departments. Each department deal with a single variety of products or similar products. See students, large retail organization, they try to divide their organization into different segments. Segments means we call parts, we call units. So each unit will deal with a particular line of product or service. This is only to ensure that administration skill is improved. We can able to concentrate more on a particular product, which results in specialization. It is also very easy for us to determine the quantum of profit of each variety of product. It is just simple, I can tell you. It's called the divide and rule policy. You divide the entire organization into different parts, into different departments. Each department deals with a particular variety of product. I can correlate an example with this to a college. A college is divided into different departments. We have commerce department, we have physics department, we have English department, we have Kannada department, we have economics department, and so on. So what principal does? Principal appoints a HOD for each department. So commerce department HOD is responsible for the result of commerce department. Kannada department HOD is responsible for the results of Kannada exam. So like this we add the result of all the departments, commerce plus management plus science plus arts, and we calculate the overall result of the college. So same way how you have experienced different departments in a college, like that we have different departments in a retail organization. A retail organization deals with different varieties of product. It can be textile, or it can be automobiles, or it can be electronic products, or it can be grocery, or it can be service, etc. Service like beauty spa, massage parlor, saloon parlors, etc. So when each department deals with each variety of product, which is each department headed by a department manager, they can concentrate more on each product. So they can think innovatively, creatively, and improve the sales performance of each department, and this will help us to find the profit or loss of each department. So this is just an introductory talk about departments. So now coming to our main topic called departmental accounts. Maintaining accounts of each and every department, determining their sales value, expenditures, profits or losses of each department, we do this in departmental accounts. Now let us go to the introduction part, students. A large business concern dealing with different goods and services is usually divided into number of departments. Technically, we can call this a segment. Segment means what? Division. Based on similarity is called segment. The goods and services sold in each department are accounted separately. So each department accounts are maintained separately. Accounts of textile department, accounts of electronic department, accounts of grocery department, accounts of beauty salon, etc. will be maintained separately. Each department means unit deals with one variety of goods, and the respective departments maintain their own individual books of accounts. So each department deal with their own books of accounts. They have a separate books of accounts maintained by themselves. It is one roof divided into different parts. All are under one family, but accounts are maintained separate. In order to determine the profit or loss, so books of accounts are maintained to find profit or loss. If a particular department makes sufficient profit, then we can recommend for additional investment. Profit is a motivation factor. The more the profit we earn, the more the expansion we make by making an additional investment. So committing investment or not determines the amount of profit earned by each department. Example, a textile department makes sufficient profit, then we concentrate more on textile department by expanding more of sales, etc. On the other hand, if the other department incurs loss, then we can recommend to discontinue that line of product. Loss making departments are a burden and a liability, have no place to continue in the business. So, by maintaining department accounts, we will come to know which department incurs loss and which department. See, example, students, a large retail organization will have many departments, but here I have just given an example of 3. First department deals with only textile products like shirts, pants, chudidar, sari, etc. Second department deals with electronic items like TV, fridge, or it can be mobile phones, or it can be audio, video products, etc. Third department deals with grocery like provisions. All food items will be dealt by grocery department. So students, what we do, we maintain separate accounts of textile department, separate accounts of electronics department, separate accounts of grocery department. So we determine the profit or loss of each department. So we find the profit of textile department, profit of electronics department, profit of grocery department. After determining the profit of all the 3, we merge the profit to find overall profit of retail organization. So we find the final profit of a retail organization. So this is just a simple glimpse of how departmental accounts is maintained. See students, you might have gone to certain metro cities would have gone to certain mall, Big Bazaar, Reliance, etc. So where they deal with the different products. Example of textile department that deals only with textile products. Example of grocery that deals with food products, consumables, consumers products, etc. Now let us go for the meaning of departmental accounts. It refers to maintenance of books of accounts of each department in order to find the profit or loss of each and every individual department, and also determine the overall financial performance of the entire business. See student, there are two things involved. First, we find the result of each department. Number two, we find the result of overall business. So I repeat, we find the profit or loss of each and every department by preparing departmental trading and PL account. After preparing departmental trading and PL account, second, we prepare general PL account. So general PL account will help you to find the overall profit or loss of the entire business. See, what are the objectives of maintaining departmental accounts? There must be some reasons, there must be some purpose of maintaining the departmental accounts. So such reasons, purpose is called objectives. So to determine the result of each department, so we maintain departmental accounts to find the profit or loss of each department. To compare the trading results of each department. Number 3, to reward successful manager. Any manager who performs exemplary, we reward him, we give him prize, we give him promotions. To ascertain the stock turnover ratio of each department, that is sales performance of each department. To facilitate managerial control over each department. As you see, the British have ruled our country based on the divide and rule policy for more than 200 years. So in departmental accounts, we go by that formula, we divide and rule. So to have better managerial efficiency, we go for departmental accounts. There are two procedures in maintaining books of accounts. One is called unitary method. The other one is called tabular or columnar method. It is a method of preparing departmental accounts wherein each department maintains its own accounts and the result of all departments are finally combined together with general PL. So what we do, we maintain accounts of each department separately. The respective department will maintain their own accounts. For example, Department A account separate, Department B account separate, Department C account separate. So that's called unitary method. Second one is called tabular or columnar method. Under this method, accounts of each department is kept in columnar form. Separate columns are maintained for each department. So it is the most important method of maintaining accounts. So in tabular method, one account we maintain several columns. So by maintaining several columns, it is easy for us to make comparisons. So in unitary method, different accounts for different department. In tabular method, one account we maintain separate columns for separate departments. Students, though each department deals with different varieties of product, there are certain expenses incurred for entire business which needs to be distributed among the departments. So one of the challenging tasks for us in departmental accounts is allocation of expenses. What is allocation of expenses? It's called distribution of expenses among various departments. So it does not require an intellectual skill to understand how expenses are to be allocated. It's a simple logic and a common sense is enough to understand these things. A simple common sense if you have, it is easy for you to distribute the expenses. So first, purchase expenses, purchase related expenses. That is, when you purchase raw material, you incur some expenses. So purchase expenses, carriage inward expenses, import duty, freight, octroi. So all these expenses are to be distributed in net purchase ratio. Import duty means tax paid on foreign purchase. What is carriage inward? Transport expense on goods purchased. So let me make a clarification, students. Carriage inward, here at the bottom we have carriage outward. Carriage inward is a transport expense on goods purchased. Carriage outward is a transport expense on goods sold. So all purchase expenses are to be distributed in net purchase ratio. Number 2, all sales expenses, selling related expenses are to be distributed in net sales ratio. Selling expenses, commission paid to the brokers, bad debts, RBD, discount allowed, sales tax, carriage outward, advertisement, etc., etc. So all sales expenses are to be distributed in sales ratio. Next, building expenses like land and building expenses like rent and rates for building, insurance for building, building depreciation, etc. to be distributed on the basis of floor space or area occupied. For example, Department A occupies 400 square feet. Department B occupies 500 square feet. A 400, B 500. So ratio will be 4:5. So on the basis of area occupied or square feet, floor space, you distribute expenses of building. Lighting expenses, heating, electricity. So all these are to be distributed on the basis of light points. It should be distributed on the basis of number of switches in each department. As you have in your house or home, you have fan switch, tube light switch, and so on. On that basis, it is distributed. Power. Power is generally used for machineries. So, it should be distributed on the basis of kilowatt or floor space. Why floor space is applicable? Because power is generally applicable to machines, and machines occupy space. So on that basis we distribute. Next, depreciation on plant and machinery, repairs for plant and machinery, insurance on plant and machinery. I mean, all plant and machinery expenses are to be distributed on the basis of value of machinery or floor space. All workers' expenses like labor expenses, canteen expenses, recreation facility expenses, it's just like welfare expenses, club, park, games, etc. Compensation paid to the workers, provident fund, employee state insurance is called ESI. ESI is nothing but a medical facilities. So all canteen expenses, compensation expenses, labor expenses, in short, worker expenses are to be distributed on the basis of number of workers or wages. Wages are paid to workers. Therefore, all workers' expenses are to be distributed on the basis of number of workers or on the basis of wages. So this is already repeated, students, in the slide and been explained. Next, for example, you see, students, certain managers, supervisors, they devote their time to all departments. A manager is responsible for overall business. Supervisor supervises all department. So manager salary, supervisor salary should be distributed on the basis of time spent in each department. Okay, so for example, a supervisor has spent 4 hours in department A, 2 hours in department B. So ratio will be 4:2. Next, general expenses like interest on capital, interest on debtors, interest on loan, legal charges, director fees, transfer fees, office expenses, all this should be distributed either equally, if not, take it to general PL. But generally you are supposed to take all these items to general PL account. So equal ratio is the second option. So all common expenses, general expenses, to be taken to general PL, because these expenses are incurred for the entire department. Sorry, it is incurred for the entire business. It is not incurred for each department, it is incurred for the entire department. So common expenses, general expenses should be taken to general PL account. Okay, students, now we are going to discuss about allocation of incomes, called distribution of incomes. Discount received to be distributed on the basis of net purchase ratio. Because you receive discount at the time of purchase, so discount received should be distributed on the basis of net purchase ratio. Commission earned should be distributed on the basis of net sales ratio. And common incomes like dividend received, profit on sale of asset, interest received, etc. should be distributed either on equal ratio, or you take it to general PL account. But it is advisable to take it to general PL. If these common general incomes are given, it is advisable to be taken to general PL account instead of distribution. So students, in the previous slide, purchase expenses should be distributed in net purchase ratio. How to find net purchase? Formula: total purchase minus purchase returns. Net sales is total sales minus sales returns. So if sales returns and purchase returns are not given, total can be taken as a base. Treatment of interdepartmental transfers. Students, sometimes one department will transfer goods to another department. Department A transfers goods to Department B. So such interdepartmental transfers are to be accounted for. So when goods are transferred from one department to another department, the following are to be kept in mind. Receiving department should be debited and giving department should be credited. The department that transfers should be credited and the department that receives should be debited. In short, transferor department credit, transferee department debit.